Good morning, everyone. I'm Steve Ankerstar, and welcome to the Ankerstar Wealth Morning Update. Today, we're going to talk about three things. We're going to talk about the return of supersonic air travel with some purchase at American Airlines or 20 airplanes that they're purchasing. Looking at the mid-2020s or so as far as the actual return that you're offering that to you, the customer. Home Depot crushed earnings this morning, so we're going to take a look at that. And then finally, if you haven't been following Apple stock has been on fire lately and hasn't really made the news cycle to show how much it's recovered. But those are three things we're going to talk about today. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. So let's get started with my favorite topic, airplanes, and the return of supersonic travel. So showing you CNBC this morning, here is your headline about American Airlines agrees to buy 20 supersonic planes from Boom. Kind of a cool name for a supersonic airplane company, right? Sonic Boom. I see what they're doing there. So again, 20 of these I'm scrolling down the article here, mid 2020s. So 25, 26 or so is when you might actually see this. Up to Mach 1.7, which of note has been the exact fastest that I've been ever. When you did a functional test flight in the F-15, you had to go to Mach 1.7 to test one specific event. So that equates to right around 1,300 miles an hour. So pretty quick when you're flying in a fighter and pretty quick when you're flying, Miami to London in 5 hours. So again, that's the promise there. And you say, hey, wait a minute, didn't we do this? And you're absolutely right. Looking over to Wikipedia, yeah, remember the Concorde? Yeah, right. I didn't ever get a ride on it, but you had to kind of be ultra wealthy. So it'll be interesting to see the affordability of this supersonic travel, right? I would have to imagine it would be priced like well above like 3, 4, 5x what the normal flight would cost. That takes you longer, right? I just have to imagine that's more of a supply and demand thing than necessarily fuel consumption, that sort of thing. But yeah, we had the Concorde around. If you was introduced in 76, it's kind of, I kind of equate this to we probably did it because we could, and then was it really viable after that? Kind of like going to the moon. Went to the moon a million years ago and really haven't been back. Someday Elon will take us to the moon or Mars or somewhere. But the Concorde, its last flight, it was officially retired in 2003, which was not yesterday. That was 19 years ago. So really haven't been down this road for a while. So it'll be interesting to see how it all plays out. But if you traveled lately, there's been a lot of angst in the air on the troubles that the airlines are having. And I know that can be frustrating, and not like I'm here to defend the airlines, but I will say that nobody at United or Southwest or American woke up that morning to ruin your travel day. They're all dealing with aviation brings a lot of constraints with it. So they're doing their best to try to get you where you want to go. And if it doesn't work in your favor, please keep yourself under control at the airport. That will help everybody out. Okay, let's switch over to Home Depot earnings. Home Depot is a great American name, one of the stalwarts, if you will, of the Dow for a long time. And there are the earnings that came out this morning. Basically, they crushed earnings, which is good across the board. However, for their guidance, remember, earnings has three parts. You have your revenue, top line, total money coming in the door. Bottom line, your earnings, they beat those, and then your guidance. And often it's the guidance that moves the stock the most. And they basically, stuck by their guidance. Right. So instead of increasing their guidance of, we're kicking butt in revenue, kicking butt in earnings, and we're guiding higher, meaning we're going to do more of that in the future, they're also realistic about, hey, we're not going to increase any expectations right now, simply because we don't, we are kind of in a recession, even though it's not officially been declared. Inflation is, yes, still a problem. I mean, there's lots of things not to like out there. So they're not taking on more risk by increasing their guidance. So overall, that's a win. When you look at their stock, from a buy, sell, or hold perspective, here's a 1-year chart. It got beat up with the rest of the market. It's recovered some, but it hasn't recovered a lot, right? So still sitting around a 20 PE. That's pretty good for a great American name. Kicks off almost 2.5% as far as dividend yield. So a lot to like about the big orange out there for Home Depot. All right, the last one I'll talk about is Apple. It's my number one personal holding, number one holding in the book, which means it's number one holding for a lot of clients out there. And look at this recovery. And this is why these things can kind of, insidious generally has a negative connotation with it, but no, insidious actually means, it's kind of happening. It's not obvious that things are happening, right? Look at this move higher. So we had kind of a double peak back in December, up just north, right around 180, hit that again almost. We had the sell off at the beginning of the year. And when you hear me talk about snapback, I might as well call it like Snappleback, because Apple is the best example of it gets drugged down by the market because of all these tech ETFs and things have Apple as the biggest holding. Well, anyhow, so it oversells to the downside as an individual stock. And then when people realize, okay, it's not Apple's problem, then it comes back faster than pretty much everything else out there. So you had it at 180 in December, you had it at $180 in April. It dropped all the way down to 130 here in negative Nancy land of June when the world was ending. I don't know what was going on and specifically drove everybody so negative, but it was the woe is me. I can never retire time. Everybody was just negative out there. And since then, it went from 130 up to 172. Not going to attempt the math, but that looks like 30-some% move higher. So what do you do with Apple? You own it. You don't trade it. You hear Kramer say that. You hear me say that. Apple, you can even put Home Depot in this category. There's just certain names you might as well just own and not try to get fancy with it because they recover too quickly. So if you think you need to, if you're like, oh my gosh, I can't stand to lose one more penny, Steve, which I've heard that's a quote, then no, you kind of just need to hold through these things, grit your teeth, look away, whatever your coping mechanism is. But when Apple's back at 170 and you sold at 130 because you couldn't take the pain, you're probably going to quit investing and go home. And I think it's all rigged, right? So really, Apple is within, Darren, I'd try another math, maybe 5% of its all-time highs. What? In the middle of 2022 that the world is ending, right? So hang in there. When you look at the valuation, is it a buy, sell, or hold? I say yes. You've heard me say that before. If you have too much, you can trim. If you don't have any, you can buy. But for most everybody out there, it's just a hold. 28 PE for one of the best firms or the best tech firm out there. Not a bad price. Home Depot was at 20, right? It does pay off a little dividend that just paid out the other day, kind of just a little bit of a, and 0.5%. It's not a game changer, even if you hold a lot of it. But it's nice to have some money coming in the door from the company. So that's all I've got for Apple. It should be in your portfolio somewhere, in my opinion, depending on your situation. So that's all we have for today. Thank you so much for your questions. Please continue to submit those to us, either through social media, through the website, or directly through email. Don't forget to like and subscribe. That's all we have for today's show. I'm Steve Ankerstar, and we will see you guys back tomorrow.